Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and we're coming into the final minutes of the trading day here on this Friday, August 9th. This is a daily candle chart of DIA, which is the Dow Jones Industrial Average ETF. And as you can see from last week's report, this was Friday when the last video went out. I said we would most likely drop to a lower level and then pivot up. That's exactly what we're seeing. My downside target was 392.18, and as you can see, we gapped down below that target, and now we're starting to creep back up to my upside target, which is $400.08. Now, that's a big question mark for me right now as to whether or not we'll hit that target, but I am keeping it in place, mainly because if you look down below, we have a buy signal on the CCI, and we're very close to a buy signal on the stochastic as the volume is increasing. So again, upside target still in place at $400.08. If that changes, you will hear from me on the midweek report, which will come out after the close on Wednesday. If we go to IWM, same story. Downside target was hit. We gapped down on Monday. We're now creeping back up. However, with IWM, you could see that we have a drop in volume on the way up. We still have that buy signal on the CCI. I did say that we would pivot up on the CCI. See that red line under the blue? That was my forecast from last week. So we're hitting on all these forecasts, whether it be the price action or the oscillators. So this, again, is another question mark. We'll have to see what happens on Monday. That upside target is 211.35. Moving on to the Qs, you can see that it's, again, a repeat of the story over and over again. We hit the downside target of 441.80. We're on our way up to hit that target of 458.49. But again, that is a drop in volume, which is showing us a sign of weakness. We don't have much more to go to get to that target. And the reason I have that target up there is because we still have an open gap, and that target is going to match up almost perfectly with the 20-period moving average that's still moving lower. So again, keeping that upside target of 458.49. Moving on to SPY. Again, same story. We hit the downside target, which was my dotted line right there of 527.07. Said we would pivot up. We're very close to that right now. The target is 536.84, and today's high is 534.51. And the oscillators are crossed already, CCI with a buy signal, stochastic with a buy signal. So we're going to hit some resistance up here, at which time once those targets hit, and we may even see the pivot lower before the targets hit, I am going to forecast prices lower than what we saw on Monday. I'll get to that in a moment when I talk about the yen carry trade that you're hearing a lot about. Well, let's move on to the VIX. This is the most interesting chart of the day. We hit the upside target and blew right through that, hitting my longer term target of 41.88. You heard from me about that on Wednesday. We're very close to hitting that downside target of 1968. Today's low right there as we're speaking is $20.50. And as you can see, the VIX is, again, minute by minute chart setting new lows minute by minute. We have about 3 minutes before the close, so you'll hear that bell ring. But once that downside gap has filled and my target is reached, I think we're going to see the VIX rip to the upside once again. So brace yourself. Remember, last Friday, I officially went on record for calling the top, not the high. I'm calling the top, the topping pattern as I described. Go back and listen to that video so you can get a good education on what I'm talking about with regard to price patterns and candle patterns. Now, the trade or chart of the week, if you're following on my X page, I put out the chart of the week with a forecast on CVX at 148.21. That's moving up quite nicely, as today you can see we have a cross on the buy signal right there in the CCI. The stochastic is about to cross with a buy signal. And congratulations and a big shout out to our equity analysis traders, where on August 6th, I put out a publication on Alcoa, ticker symbol AA. You can see here, there was the hammer candle, and the day after that is when the trade notification went out to buy Alcoa at 29.20. So if you got into that, you're already up 5% or a little bit over 5% in just a few days. Now, again, to our equity analysis traders, we have a gap fill today. So that gap fill is showing up on lower volume. Hint, hint, protect your profits. I can't tell you when to get out, but I can certainly talk about risk management and position management, especially when you have a profitable trade. You certainly do not want to turn a winner into a loser. Not a good thing at all. If you're interested in our 15-day membership, all you have to do is go to StickyTrades.com, go to the bottom of the page, and you'll see the contact form. I'll leave a link to this at the bottom under the description page, where all you have to do is put in your name, your email address, and type in interested in 15-day membership, and we will reach out to you and set that up. And you'll have 15 days of my trade publications, my analysis, my webinars, my rapid fire stock analysis, and there it is. The markets are officially closed. So remember, go to our member page, hit the contact us, send us a message. There is absolutely no credit card needed. You've heard me say this before. I'll say it again. We don't play that game of taking people's credit cards and then putting the burden on you to have to cancel. If you like it, and I think you will, then you'll sign up even at the lowest membership. We have members that are extremely happy, and we have members that are bringing in a lot of money, especially this week. I'm not even going to get into some of the money that people brought in this week because you probably wouldn't believe it. But our VIP members especially are doing incredibly well. Let's go to the geopolitical news. Remember that we are using the 7-point trading checklist. This is how I do my forecasts and why my track record is the best in the world with regard to the target hit rate. I have over 80% target hit rate on all of the stocks that I analyze, and you'll have access to me on Wednesdays, especially where you could submit to me your own ticker symbol and I'll put a price target on it. All right. Remember, last Friday, I went on record, like I said, and officially called the top. Keep an eye on that because our charts are still showing a lot of negativity. And with that, the data is also showing warning signs. Here is a temporary help requirement chart. And you can see that the temporary help requirement is dropping. The last time we saw a steep drop in temporary help like this is during the Great Recession in 2008 and right through into 2009 and beginning into 2010. The interesting thing that I've noticed here is that we don't have a recession officially announced yet. I personally think we're already in one. I think they're doing a great job of camouflaging those numbers. You're going to see unemployment numbers continue to remain high, although they're going to fool you and say unemployment is dropping. But guess what? Unemployment rate is still rising for the 4th consecutive month. If we go on for one more month and have 5 consecutive months, we're in nosebleed territory here with regard to those levels being reached since 1950. And so that is a sign of a recession on its way. And they're not talking about this on any of the financial news programs because they want to buffer the emotions, right? They want you to think, oh, everything's okay. Keep on spending, keep on buying. But the fact is that a lot of the stocks are showing negative earnings, particularly in the Russell 2000. Look at this. 41% of the companies in the Russell 2000 have negative earnings. This is comparable to the levels we saw back in the peak of 2008. Remember what I was talking about? We saw a drop in the temporary help requirement in 2008, and we're also seeing the negative earnings start to increase. Notice right there, that's not a pivot lower, that's a pivot higher. So we could wind up with eventually record high number of companies in the Russell showing negative earnings. Stay tuned for that. You know, when I talk about my long-term targets of the markets pulling back to the 2020 lows, people say, oh no, that's too much. Yeah, we might get a 25% pullback. We might get a 30% pullback, but a 50 or 60% pullback in the market is unheard of. Oh yeah, well look at Airbnb, which in my world, this is a leading indicator of what's happening in the economy, because the property owners of these Airbnb rentals are suffering from a real estate bubble and lack of patrons coming in, going on vacation using their properties. Airbnb is down 35% from the March highs. And when you think that's bad, look at Lululemon, down 54% from the highs in December. And when you think that's bad, guess what? SMCI, which is super microcomputer, is down 60% from the February highs. This is the AI bubble beginning to burst. And the mega cap stocks are also seeing a downturn and moves with the mega cap aggregate that I track. It's starting to move below the major moving averages. So when the mega cap stocks start to go down, the institutions start to suffer losses. And what happens is the dominoes start to go down. Now on Monday, the big narrative was the yen carry trade. What is that? Well, it's something that they're pushing off as a not so big event, but this is in fact a huge risk to the market. Let me explain to you what this is. Japan has been mired in a decades-long deflationary spiral from which it's only now climbing out of, and its rates have hovered around the zero line for decades. So what does this mean? Well, people were borrowing the Japanese yen for zero interest. I'll just put JPY over here for Japanese yen. Then what they were doing is converting that to US dollars and taking those dollars and investing them in other markets around the world, particularly the S&P 500. So as interest rates were remaining zero, and in some instances negative zero, they were borrowing for free and investing in a market that was going up. However, what happens is when the market looks like it's being threatened, which it is, they have to unwind this position. And according to Deutsche Bank, the yen carry trade amounts to a whopping $20 trillion, or over 5 times that of the Japanese GDP. So when you hear analysts say, yeah, we're 50 or 60% through the carry trade unwinding, that is a bunch of malarkey, because $20 trillion could take years to unwind, or else they're going to collapse the market if they try to do it all at once. This is a serious threat. And with that, there's another story that's hardly getting any coverage whatsoever, and that's what's happening in Russia. The Ukrainian army has crossed into Russia, and we're seeing the third day of an incursion over the Russian border. This, my friends, is going to lead us right into World War III if we're not careful, because Russia is watching NATO fund the Ukrainian forces. So Russia's going to say, okay, well, you want to have it that way, we're going to fund Iran, and good luck Israel. And now we have 2 battlefronts that we're getting involved in. So this is something that's not getting any coverage from what I can see, and it's something you have to pay attention to. Keep an eye on what's happening in Russia. Keep an eye on what's happening in Israel. Keep an eye on what's happening in China. I've been saying that for, well over a year now. Keep your eyes on China. And of course, keep your eyes on the charts. Again, here is the monthly candle of QQQ. Why do you think I went on the record for calling the top last week? Well, this is the monthly candle that ended the month of July, and already August has a lower high and a much lower low. This resembles very closely to what we know of as a hanging man. You see the oscillators on the monthly chart are now crossed with sell signals. The next thing you're going to hear me report on is how the markets are threatening or testing the 200-day moving average. And once the 200-day moving average is breached, all sell stops are going to start getting triggered. You're going to have institutions managing risk and liquidating into cash, and the beginning of what could be the greatest crash in American history is going to follow. That is my opinion. That's my analysis. And if you want to stay close and connected to my charts, go to X. Just subscribe or follow me on X, and I'll be putting out alerts on Bitcoin. I'll be putting out alerts on silver. I'll be putting out the chart of the week. And with that, you have a great weekend, folks. Thank you for liking, subscribing, commenting, all that great stuff that gets the algorithm going. You're really helping us out quite a bit. Have a good one. So long.